Hello everyone, 6/30/26 Tuesday. My typical disclaimer, please read when you have a chance. Let's talk about one of my heroes, Nicolas Darvas. He wrote a great book, How He Made $2 Million in the Stock Market. What's remarkable is that he's a Hungarian ballroom dancer who turned stock trader. He created the famous Darvas Box method. He traded only using newspapers and telegrams. He turned his savings into $2 million in 1950s. He wrote a best-selling investment book in 1960, and the box method is still used by traders today. What did he do? A lot of people say, keep it simple. And this is the simplest but most effective, brilliant strategy that I could think of that I'm amazed that he came up with. And so here, yesterday I showed this S&P 500 from this year, from 2021 to 2023. Had an uptrend, hit its head, came down, and then found support and started going up again. So if you use his method is ideally draw a box. Let's use these grid patterns as they are. Draw a box, draw another box on top of it, so on and so forth, until you get to an apex, and then draw more boxes as it goes down. So you would do this in real time. So ideally you would be over here, see the price action, and so on and so forth. So the price action candlesticks move, when they move above the box, you buy more of stock X. So as soon as you get here, you bought here, you get up here, it comes over here, price action breaks above the box, you buy more. Repeat, repeat. Now, as long as the price action doesn't go below the box, you stay in the trade. It hits the apex, bounces around over here, breaks over here, but you could sell here. Let's say, for example, you held a little bit longer. The price action goes here, comes up here, goes over here, and breaks for the first time. Now you're in a downtrend. So what's the definition of a downtrend? Lower lows, and lower highs. So we're going from, we are doing that pattern here. So what's happening is that you can also, if you want to get out of a trade, as soon as it breaks, you get out. So super simple, quick boxes, brilliant. So if we just look at the uptrend only, you can see here is as long as the price action stays within the box, one holds. Over here, it never breaks. And only here, one doesn't sell the price action, the candlesticks, until they fall below this box. So it's right here is ideally where you might get out, or even if you want to wait a little bit, you can wait for the next one. And again, over here, no system's perfect. If you were watching it as it was going down, it would go over here, and then it came back up. It's not perfect, but ultimately it did follow and create new lower lows. And then when do you want to get back in? Here's your box. Here's the new box. It broke above and it broke above again. Now we're going to a new uptrend, higher highs, higher lows. Let's look at this trade one more time. Look at this. It went up following his method, went down. You could have sold here. If you held a little bit longer, you would have sold here. Not bad. Figuring this out in the 1950s is unbelievable. If you find value in these types of videos, please like and subscribe. I'm trying to introduce you to different people who've made a huge impact in the trading community. And I'll also have videos on real estate soon. If you want a little bit more, dig a little deeper, go behind the curtain, if you will, I offer on Patreon, Paul the Investor, go to membership. I have a gold tier application here, membership, as well as a premium tier where I go more deeper dives. And here is basically what I offer for each. Thank you for your support. Thank you for your attention. Have a great day.